Hey traders, today we are going to dive into something super practical, how to set up your TradingView charts if you're using the free plan. Now, let's be real. TradingView is an awesome platform. It's very intuitive. It's very pretty to look at. But if you're just getting started or maybe you are working with a small account, you may not want to spend the money on a subscription yet, or you just may not have the money available yet to spend money on charting software every single month. And so what happens is the free version gives you access to some really great tools, but it only lets you use 2 indicators per chart. It used to be 3 a few months ago. They switched it. They really want you to upgrade. So what do you do when you're limited to just 2 indicators? In this video, what I'm going to do is I'm going to show you exactly which 2 indicators I would choose for day trading, swing trading, and for long-term investing if I was limited to only 2. And most importantly, I'm going to show why they work so well for my specific trade setups and why they work for me. And I'll also sprinkle in some tips to help you get the most out of TradingView if you're on the free plan. So let's dive in. Before we jump into the setups, let me show you a quick overview of TradingView and why I love it. One of the best features is the ability to save templates. So if you look over here in the top right corner, you can see that you can save a template for day trading, you can save one for swings, one for long-term holdings, one for crypto, whatever you want. And the thing is, this makes it super easy to switch between strategies without having to reset your indicators every time you switch strategies. And so it's a huge time saver, and it's going to help keep your charts clean and organized. Now, here's another pro tip for you, okay? So down here on the bottom of my screen, I have the volume indicator set. The way that you find this indicator is you just click on indicators and you type in volume. This is the way that you find any of the indicators that I talk about today, and you can click on it and it will be added to your chart. And here's the thing about the volume indicator. The volume indicator is a free indicator that doesn't count against your 2 indicator limit. And so I always recommend keeping volume on your charts because it's such a critical tool for understanding the strength behind the moves of your trade. Why is volume so important? Well, think of volume like the fuel behind the move of a market. Without volume, the market's going to struggle to sustain moves no matter what the technical setups show you. And so if you're looking at a low volume situation, it often signals a lack of conviction. In other words, the move might not have enough strength for your technical setup to follow through, or it could be signaling a sign of a reversal. And so just for an example on this chart, if you see a lot of selling, you see small volume bars on down moves of the market, that could be a sign that the market is bottoming because there's no volume there to sustain the downward move. On the other side of things, if you see high volume, in other words, you see large red volume candles like this one right here that I'm showing you on my screen, that means you need to pay attention because it shows strong participation in the move, whether it's buying or selling. And so that can signal the start of something bigger, a bigger trend or a bigger move. And so volume is a super powerful tool, and it helps confirm whether breakouts, pullbacks, reversals, or the technical setups that you're looking at are likely to hold or continue. And since it's free, there's no excuse not to have volume on your chart. So with that said, let's dive into some of the day trading setups that I would use if I could only have 2 on my chart. For day trading, my go-to indicator is the Keltner channels. So let me take a second and break down what they are and how I use them. So these are the Keltner channels on my chart. What are Keltner channels? Keltner channels are volatility-based indicators, and they are made up of, on my chart, they're made up of 2 lines. They're typically made up of 3 lines. I will talk about the setup on those in just a minute. But this bottom line here is going to be the 9 exponential moving average. And so the middle line typically on a Keltner channel is going to be an exponential moving average. What an exponential moving average is it takes the average price over whatever time period that you choose, and it kind of smooths that out into a line. And the thing that makes it exponential is it's going to give more weight as we get closer in time to the current time period that we're looking at, and that's what makes it an exponential moving average. And then the outer bands, typically on each side of a Keltner channel, are going to be the average true range of movement, price movement on that stock from the exponential moving average that you are using. So on mine, I take off the bottom Keltner channels because I'm typically trading to the upside when I'm looking at trades. And so this line here is the 9 exponential moving average. This line is 1 ATR above the 9 exponential moving average, which is the average true range of which like when the stock moves, how far does it typically move in one average range. And then the second line above is the 2-period ATRs. The like if it were to get extended to 2 times the average true range. So let me show you how I have this indicator set up. What I do is I have 2 Keltner channels stacked on top of each other, and so the two Keltner channels take up the indicator limits that I would have on this setup. And so on my first Keltner channel, the way I have this set up is I have the link set up to 9, the multiplier set up to 1, so 1 ATR, and then I have the ATR length regular as well. I use the exponential moving average. And then for the style, I have the lower bands and the background turned off because I don't like the way that they look on my screen. For the other one, it's going to look very, very similar here. I have the lower band and the background turned off. My input is slightly different. Still have the length of 9, but I have 2 for the multiplier there. I'm also using the exponential moving average. You can take a screenshot of this and save the settings or whatever if you want. Now, the cool thing about using the Keltner channels is I'm using 2 Keltner channels stacked on top of each other, and since one of these lines is the exponential moving average, I'm actually getting like an extra indicator on the chart. So when you combine that with the volume, you're now looking at having 4 indicators on your chart as opposed to the 2 that you're normally limited to. Now, the reason I choose the Keltner channel as my indicators on day trading is because when I'm day trading, I'm focusing on momentum-based plays with news. And so these setups require me to be really precise with my entries, and they require me to have really clear profit-taking levels, and the Keltner channels provide both of those things. So this middle line here, the 9 exponential moving average that we're looking at, that helps me nail my entries. I will sometimes wait for a price to pull back and consolidate at that moving average, or I'll wait, if it's coming from beneath it, I'll wait for it to break and hold above it and then continue to move higher. And so the 9 EMA oftentimes acts as support or resistance for getting into momentum-based plays for me. The outer bands here, the 1 ATR and then the 2 ATR above it, those are going to be my profit targets. So I'm going to take profit at the first ATR. It's moved an average move, so I want to take some profit off the table. Then I'm going to take some more profit off the table at the second ATR band. And then in my normal setup, I would have a third ATR as well. It many times is not going to go 3 ATRs in a move, but I like to know if it does, so I can maybe take some more profit off the table. But you can just ride the trend from there after the second ATR. And so this helps me lock in gains while letting the trade continue to run if momentum continues. And so using the 9 EMA for entries and then the outer bands of the Keltner channel for exits creates a clear and a repeatable system for day trades. And this approach works because it allows me to manage risk while maximizing my potential profits. So that would be my day trading setup. Let's talk for just a second about my swing trading setup if I were limited to just 2 indicators. So when you're swing trading, what you're going to do is you're going to be holding at least overnight. You're maybe going to be holding even for a few weeks. And so my top 2 indicators are going to be the 5-period simple moving average. And so I've already explained what a moving average is, but a simple moving average means there's no weight given to recent time frames. It's just an average line smoothed out over the amount of candles that I've chosen. And then I'm also going to choose the 21 exponential moving average. So this blue line that's kind of hugging the candles a lot closer, that's the 5-period exponential moving average. This yellow line here is the this is the 5-period simple moving average. And then this yellow line here is the 21-period exponential moving average. Again, it's similar, but it's going to place more weight on recent price action. And the reason I like the 21 exponential moving average is because a lot of the high-frequency trading algorithms in the market, they use the 21 exponential moving average as well. So it's a fantastic tool for not only identifying pullbacks, but for getting in to a pullback on a trend. And so with swing trading setups that I teach and the swing trading setups that I use, they rely really heavily on sustained momentum and on getting good entries on pullbacks. And so that's why I chose these 2 as my top 2 indicators. The 5 SMA, what that does is that helps me spot when a stock or when a sector is on an extended run. And so if the price stays above the 5-period simple moving average for several days, like 7 days or more, that's a clear sign of momentum, and now I'm looking for a pullback to enter. The 21 exponential moving average is kind of my go-to for finding pullbacks on moves. And so when price retraces to the 21, to this yellow line right here, the 21 exponential moving average in an uptrend, that oftentimes acts as support. And so let's say that a stock that I'm watching gaps up on news and I want to get in, but I don't want to chase, then, and I'm convinced that momentum is probably going to continue, what I can do is I can actually wait for a pullback to the 21 exponential moving average and then get a safer entry. And so the 21 EMA, that's where I look to enter trades in the direction of a trend. And so that's why I've chosen those two indicators as the primary indicators that I would use if I could only use two for swing trading. So now let's talk for just a minute about the long-term holdings, okay? Let's say I want to be in long-term trades. Well, for long-term trades, I rely kind of primarily on two strategies. I do a lot of option selling strategies, and then I just dollar cost average into things that I want to hold long-term. So if I'm looking at what are the two indicators for that goal, those for me are going to be the RSI, or the relative strength index, and the 50-period exponential moving average. So let's talk about these two indicators for just a minute. What is RSI? RSI is this indicator that I have down here on the bottom of my chart. RSI is a momentum oscillator, and what it does is it tracks the speed and the change of price movements, and it ranges from 0 to 100 on how quickly the price moved within a given range of time. And the way this is traditionally used is if this line is above 70, then that is considered an overbought level, and people are anticipating price to kind of consolidate or move back. And then if it goes below the 30 level on the chart here, then that's considered oversold, and people are waiting for price to consolidate or move higher. And one of the specific ways that I have this tweaked for me is I have my RSI length set to 5, so it's only looking back over a 5-period time frame. And the reason that is because it provides quicker signals, and there are 5 trading days in a week, and since I use a lot of monthly or weekly option strategies, then the 5-period works for me really, really well to get me in when I want to get in. I have my type set as the Wilder's moving average, length 14, 2 as the standard deviation, and then I don't use the RSI-based moving average on it. I don't use the middle band, and I don't have it background filled because it's just extra stuff on the screen that I don't want to look at. Okay, and so for me, one of the ways that I would use this is if the RSI is oversold, like it is here on this level on April 18th of 2024. I'm just choosing this as a random time. If it's oversold, I might sell a put option to capitalize on a potential bounce that I'm anticipating to bring in cash flow. The other indicator that I have on the chart here is the 50 exponential moving average. The 50 exponential moving average is just a long-term trend indicator. It's one of the most reliable and respected moving averages for staying on the right side of the market when it comes to trends. And so I use the 50 exponential moving average just to make sure that my trades, my long-term holdings, are in line with the overall trend of the market. And so if the price is above the 50 exponential moving average, that's when I'm going to focus on long opportunities. In fact, I rarely take a trade on anything that's below the 50 exponential moving average. And this is especially important for things like selling options and stuff like that, where I want to ensure that I'm trading in the direction of the broader trend of the market. And so together, these two indicators, the 50 exponential moving average and the RSI, give me a clear picture of momentum, and they give me a clear picture of trend direction, which is critical for my long-term trades. And so as you can see, when it comes to using TradingView, the free version of TradingView, each of these indicators is chosen carefully to align with my specific setups. I use Keltner channels to help me nail entries and to take profits on day trades. I use the 5 SMA and the 21 EMA, which are perfect for spotting momentum and for timing pullbacks. And then I use the RSI and the 50 exponential moving average to keep me on the right side of the trend for my long-term trades and my income generating strategies like selling options. And so these indicators that I've given you are simple, they're effective, and they work across all time frames, making them a powerful foundation for any trader. And so if I were using TradingView for free and I was only limited to 2 indicators per chart, those are the ones that I would choose and why. And if you want to learn how to trade the setups that I trade with these indicators, I teach all of my setups and all of the indicators that I use and more inside my trading community, the Legacy Profits Club. And so you'll find the link in the description below. I offer a free 7-day trial so you can check it out risk-free. It's not going to cost you anything. You can cancel at any time. And inside that community, you get access to live trading sessions, daily trade ideas, exclusive tools that we have created to help you become a better trader, and most importantly, you get a supportive community of traders who are there to help you succeed. So if you want to join that, you can click the link, join for free for 7 days, and start building your trading success. If you found this video helpful, don't forget to hit that like button, that subscribe button, turn notifications on. It helps me grow this channel. It's super important to me, and it helps you make sure that you don't miss any future videos. Thanks for watching. I'll see you in the next one. Hey traders, if you've enjoyed this video and you found it helpful, then I've got something special for you. Imagine taking your trading skills to the next level with a comprehensive course designed to help you get consistently profitable on any time frame, regardless of your availability. By joining the Legacy Profits Club Pro community, you're going to gain access to an extensive course that covers everything that you need to know to succeed in trading. On top of that, you're going to get daily trade ideas. You're going to get personalized feedback on your own trading, and you get to be a part of a thriving community of like-minded traders who are some of the best traders on the planet. But that's not all. We also have live Q&A sessions and live trading sessions and regular workshops to help you continue to grow. And you can ask questions. You can see our strategies put into action on a regular basis. It is the perfect environment to grow and refine your own trading skills. So if you're ready to elevate your trading game, click the link in the description below to join the Legacy Profits Club Pro community. Let's achieve those trading goals together.